everyone. So if you are looking to see a replay of what we do talk about, if you can't get to the whole call, please check out the YouTube channel that I've sent a link for. I've also got a link here for the LCMS Traders 5-step checklist as well. So that's a quick go-to video just to watch and just to get an understanding of how we actually approach the markets too. So I will just go now to the US dollar index chart here, thanks to Samtrade now. So what we did see was a bit of an interesting session, and we saw the US dollar index move to 93.40 just over. And then we did see a pullback. I've got the daily time frame here just to provide a bit of a higher time frame context now. So we can see it has topped out. It's retreated a little bit after, there was just a lot of uncertainty in the markets, but we saw, frankly, that to sort of conclude the US session last night, in the current Australian session for the stock market is, going not too badly. We're actually pulling back somewhat after we closed around 2% down on the day yesterday, which is, quite significant. And, just to get an intraday perspective, this is the 4-hour time frame. And, if we get back to around the 93 flat area, that should be an interesting point for buyers, or we might just hold this, sideways consolidation until the thing is with the Evergrande situation, it's the Mid-Autumn Festival in China. So they've had yesterday and today off as well. So there's obviously chatter around in regards to economists and analysts and things of that nature, but just going by the price action, you just get a feel that it's not panic stations in regards to how it's going to affect global markets. And we even saw the Aussie dollar discussed yesterday. It actually did, pick up a little bit. So what I do also want to talk about is just an interesting point here with the VIX. So this is a measurement of the volatility index. I've got it applied to the S&P 500 here. This is the daily time frame. So you can see when it spikes like this and there's more volatility, that simply implies typically that we are seeing selling in the equity markets. And that can be an interesting gauge to see if there's any sustained selling at all, or if it's just a bit of a brief market uncertainty. It causes, individuals just to get out of the market, but then, the dips are bought, and it looks like the dips are bought. But just for context, we've got in February, that's what it looked like when we had a lot of selling. That's when, there was some significant market movements, and we're only at, 25.71. The market is closed right now as well for this. So, it's not at that level. So we are just seeing, a pullback, and it's going to be interesting to see what happens into tonight's session. But for the US dollar right now, I would say with the calendar, and we'll just refer to that, it's very much a point where we have mentioned this already with the FOMC meeting that's coming up. That's probably going to be what you'd want to wait for, and make sure you catch the currency call on Thursday morning with Kim Hong. He'll be going through how that all went. But for today, we've got Tuesday, and this is GMT +8 time zone. We've got the building permits coming out, but really it's going to be a watch to see how the markets react to the ever progressing situation with Evergrande and things, around that, and how it's going to affect things. So staying out for now is probably the best play for a conservative operator in the markets, and just waiting to see how things transpire once China reopens tomorrow as well.